talk about, first of all, the short squeeze that has happened, GameStop, the wild stock that was. What are your thoughts? I mean, it's come back to earth after last week's trading frenzy where it saw a move above $500. Now, what do you think? What are the takeaways from what we saw in GameStop? I mean, I certainly love that teenagers are now getting more interested in the stock market than they are in buying junk. Maybe there'll be some traditional long-term investors, but for now, I mean, they're in this high-flying game. It's a little tough. What's your takeaway?
I think first and foremost, we're seeing sort of the logical result of a long-standing trend, 20 years, of the rise in the importance of the individual investor. I mean, right 20 years ago, there were no self-directed investors. Now we have close to 50 million. I think they figured out how to do what the hedge funds and institutions have been doing for a long time in terms of bully investing or mob investing, pushing stocks up to create momentum to suck more people in. That's a long-standing strategy that goes back to the original So's bandits when day trading first started. And I think that it's also important to note that institutions probably made more money than individuals did in this situation. This is not just an individual investor phenomenon. There were 20,000 share and 30,000 share blocks being traded during this time. So I think it's important to recognize that this is not really the sort of David versus Goliath scenario that we made it out to be, but really more the individual investor, the self-directed investor, kind of taking the tiger by the tail and exercising some advantages that they've had for a long time, but maybe didn't realize they had.
Yeah, and you know, as pros, you're supposed to look at fundamentals. Pros use technical analysis. I'm not sure that fundamentals or technical analysis were any part of the discussion. It was just hold the line. So now what? We have the GameStop run up, run back. Is there something on GameStop in particular that people should be watching for? Where would you say it's fairly valued? And what other names are you also watching in this frenzy?
Yeah, no, I think the GameStop phenomenon really revealed something important. You know, look, the way TD Ameritrade handled it versus Robinhood, I think was really cool, right? I mean, you raised margin requirements. You made sure that people had the capital in place to support the trades or the risks they were taking. I think that was a good way to handle it as opposed to censoring trading. But I also think what we're going to see here is more awareness for individual investors around the importance of fundamentals. It's not to say that fundamentals need to be 100% of your process, but they shouldn't be zero. And when you get completely disconnected from fundamentals in your trading, you're just taking a lot of risk because you never know when the trend that pushed the stock up to dizzying heights might be the same sort of mob or force that pushes it down to being undervalued. So having a fundamental anchor or piece of what it is you're doing is important, which is another way that TD Ameritrade, I think, has been cutting edge because they've provided cutting edge and top tier fundamental research for a long time. So I think the takeaway here is, look, the stock's probably not worth more than $40 in reality, right?
Right.
And as it falls back to that, and people kind of, sort of have their comeuppance in terms of the risk they unknowingly and recklessly took because they weren't looking at fundamentals, maybe the next time around they'll start to think, you know what? Even if I see a great trend in this stock and I see something happening, maybe I should run it through a fundamental screen just so I understand how much risk I think I should take. Because going all in or even significantly in on GameStop when it was so far disconnected from fundamentals was a really reckless and dangerous thing to do. But if you don't have a fundamental anchor in your analysis, you got no idea really how far out on the risk curve you're getting.
Yeah, it's amazing because fundamentals went out the window and people were putting their last dime in. And actually, I was reading one person said, I paid off my school loan. So good, lucky for you. But I mean, you can really be caught on the wrong side of the trade. And I think reckless is a good word because you really need to be careful with this kind of stuff. We just finished talking about Secretary Yellen over at the Treasury and a lot of talk, and maybe there might be some regulation going forward. I don't know. Raising margin requirements, always a good way to sort of handle things a little bit. But I do want to ask your thoughts when you talk about valuations. Where is the better play? And could this happen again? I mean, what stops this happening again if GameStop's at 40?
I think you're right, Nicole, right? We don't know when this is going to end. And, a factor I failed to mention on the front end is one that you just brought up, and that's the Fed. and the enormous amount that the stimulus, as you mentioned in a previous segment, everybody loves stimulus, especially stock markets. And I've heard a lot of professional investors say, hey, we know we're on a sugar high, and this stimulus is going to just keep the sugar high going. And my goal is to make as much money as I can during the sugar high and just make sure I get out in time. So yes, I think this could absolutely happen again. And I honestly think it's really just the extension of a long-standing trend. I mean, the first sort of mob mentality stock was Netflix, which has been pushed up well beyond its fundamentals and where it should be. The next one was Tesla, right? And we see the cycle kind of get faster and faster, which is why Elon Musk was railing the CEO of Robinhood, because he knows the same forces behind GameStop have been the force behind Tesla's meteoric rise. So look, these investors aren't going away. They're going to get more stimulus, and they're going to want to play this game again. They're going to want to exercise their power, their strength, and their newfound strength. And so, good luck to you if you want to play that game. But I would say play it with at least a little, just a sprinkle of fundamentals to give you some sense of how quickly you might need to pull the trigger to sell to ensure you don't lose too much. Because to your point, Nicole,
Right.
for every person that was able to pay off all their school loans, there's going to be probably 10 people who lost their shirt. So it's easy to pick out the winners when things are good, but we got to be realistic here that there's probably going to be as many or more losers on this when it comes back to reality.